Hello and welcome to Livewire's Buy, Hold, Sell. My name is Chris Conway. One of the challenges of investing in the global small and mid-cap space is that there is just so many to choose from. Meeting the definition here in Australia, there's about 250 companies. Globally, that number is more towards 8,000. But fear not, ladies and gentlemen, we've got you covered. In a special episode today, I've asked my guests to bring along 3 stocks that they're bullish on. So that's right, it's going to be wall-to-wall buys. We've got a lot to cover. I'm going to get straight into it. Nick, tell us what your first stock is and why you like it.
So first stock's Warner Music Group. Warner Music owns the catalogue of your childhood. Basically, they own 25% of the world's music, and they also manage a lot of artists that you'll see in the charts today. I think it's a really interesting business for a couple of reasons, but the first being that they're actually taking share in the charts, which is good for their revenue share in Spotify. The second reason is they've just recut a new agreement with Spotify. They're going to get more guaranteed price increases each year. And the third reason is that they're through a pretty painful restructure of the business, which has been a bit messy with their accounting and their numbers over the last couple of years. So putting it all together, I think this is going to do mid-teens free cash flow growth in the coming years, and it's at a pretty reasonable valuation.
Nick opening the account with Warner Music. Michael, what have you got for us? First pick.
So our first pick is Visional. Visional is a Japanese HR tech company. I'll give you a bit of background on this. The structure of the labour market in Japan is changing. In many countries, it's common for people to change jobs over the course of their career, as I'm sure we all have. In Japan, that is not as common. It's not that uncommon for you to see people that will stay employed by the same company for a couple of decades. That is changing though, and it's changing because the workforce is shrinking and because the skills that are required by employers are also changing. Visional is both driving that change and benefiting from it. So it owns a digital platform that's called BizReach. So that enables mid-career employees to upload their CVs to the platform anonymously, and then companies can reach out to them directly. So it's a bit like an anonymous LinkedIn or Seek or a recruiter all kind of bundled into one. Visional has grown its revenue and earnings at more than 25% per annum for the past 5 years, and yet its valuation remains pretty compelling, we think, because some earlier stage investments are obscuring financials, so people just don't know how good it looks, but we think the valuation's really attractive.
So Visional first up for you. Michael, I'll stay with you though. What's pick number 2?
So second pick is Clean Harbors. This is a hazardous waste management company. So if you're a manufacturer or you're a chemicals company in the US, you will produce hazardous waste and it's your responsibility to safely dispose of it. And that's what Clean Harbors does for you. So it's by far the leader in this hazardous waste space. It's vertically integrated. So it's got the trucks that come and pick up the stuff. It's got facilities to recycle and dispose of them, including most of the commercial incinerators, hazardous waste incinerators in the US is what it owns. It's got the people and it's got the know-how and it's got the permits. And these are all scarce assets. So we think it would be extremely difficult for someone to now replicate the assets that it's built. No one wants a commercial hazardous waste incinerator in their backyard. To give you an example, Clean Harbors built an incinerator in 2017 in Arkansas, and that was the first commercial incinerator to be built in the US in almost 20 years. We think that provided companies are still making things and provided that people want their rivers to be clean, that it's got a bright future with an additional tailwind if we do start to see some manufacturing coming back to the US.
So Clean Harbors for your second pick. Nick, over to you. What's your second name?
We're bullish on Propetro Holdings. The ticker is PUMP, which I think is pretty apt. The lead here is that US data centers are short of power, and Propetro has a short-term solution for that, being these mobile generation sets. What they do is they go on site at a data center. They set up effectively a behind-the-meter microgrid with gas turbines and other mobile generation fleets. And they're able to offer power to data centers at a reasonably economic rate while data centers are waiting to connect to the grid. These data centers can wait many, many years to connect to the grid. There's a big backlog, and Propetro has an ability to service that power near term. What's changed in the business is that the contracts that they're signing with these data centers and data center groups are long-term in nature. They're typically 5 to 10 years. The returns are very attractive, and the number of data centers that are now requiring behind the meter solutions is growing as well. So we think they've signed their first contract. We think they're going to keep signing contracts in the coming years.
So that's number 2 for you, Nick. Propetro, give us your third pick.
I'm going to stay on the AI theme. AI has been dusted up a little bit in the last few weeks, but my third choice would be a company called CORZ. CORZ used to be a Bitcoin miner of all things. That's a horrible business, but what the core asset was power. I mentioned the trouble connecting to the grid before. What CORZ has is 800 megawatts of grid connection already. They've signed a customer contract. That contract has already gone live and it will ramp up over the next 2 years. Look, that was a really nice contract because not only did the customer commit to 12 years with them, but they're also paying for all the CapEx as well. So these guys are effectively a royalty on AI near term, but they've also got excess power as well. And so they'll sign that hopefully in the coming months. So we should see earnings growth, not only from the current contract they have coming online, but more contracts too. So I think it's trading at a really nice multiple for the effectively guaranteed earnings growth in the coming years.
So CORZ for your third pick, Nick. Michael, bring us home. What's number 3 on the list for you?
Third one for us is STERIS. This is a US-listed sterilisation company. It's obviously critically important that items used in hospitals and medical devices are sterilised before they're used. If you're getting a hip replacement, you want to make sure that that hip is sterile before it goes in, and STERIS helps you do that. So it's got 50% market share in the US. Most of the business is recurring in nature, and it's benefiting from steady ongoing growth in healthcare procedure volumes. STERIS had been impacted a little bit by some cyclical weakness coming out of COVID, and there was a little bit of policy uncertainty around what Trump was going to do. But this company's got a long-term track record of performance and a pretty reasonable valuation as a result, we think.
There you have it, ladies and gentlemen. As promised, 6 buys for your watch list, some hot names in that list, so make sure you add them. Massive thank you to Michael and Nick for this entire series of Buy, Hold, Sell. If you enjoyed this episode, give it a like, and don't forget to follow our YouTube channel. We're adding lots of great content every single week.